Good afternoon, everyone, and welcome to Stock Market Today by Investors Business Daily. It's Monday, April 25th, 2022, and I'm Justin Nielsen, joined by Ed Carson while Alyssa is on vacation. So it was a pretty stunning reversal today. So before we'll talk about some of the stocks that were looking like they were setting up, even from this morning. That includes Exelixis, EXEL, Worldwide Entertainment, World Wrestling Entertainment, WWE, and then also Marriott. So we'll check into those stocks. But first, let's do a quick rundown of the markets. It looks like the S&P 500 managed to close up nearly 0.6% after being down earlier in the session. The composite even stronger, a 1.3% gain, and it was down also earlier in the session. So a stunning comeback there. The Dow Jones Industrial Average up 0.7%, and the Russell 2000 also up 0.7%. So, Ed, let's get your take on this. What do you think of the market reversal? Is it the all clear signal?
No, I mean, obviously, look, it's always good to have an up day versus a down day. So it's nice to see that, nice to see some slowdown. But the fact is, this is just one day. I mean, it's nice to see that move. We've had plenty of one days in these past few weeks. I mean, bad markets have plenty of good days, and this was by no means a great day. But the best days in market history are in bad markets. So we'll see. What we want to see it, does this continue? Do we have several good days over the next several days, and then really get confirmation that any rally attempt has legs? Right now, nice bounce, but I don't think it really changes a whole lot yet.
Yeah, and for as strong as it was, I guess my concern is that it's only kind of getting a fraction of the recovery of Friday's downside. And also, what was driving this? I was looking at the NASDAQ 100 earlier, and right into the close, I just looked at the top 10 gainers on the NASDAQ 100, and they were all up 4%, but only Fortinet and Palo Alto Networks, FTNT and PANW. Those were the only two of the top 10 gainers that were above their 200-day moving average line. Everything else was below, and sometimes well below. You had things like Moderna and DocuSign and some of the things that were just really kind of clobbered. So I guess the other part too is that some of the stocks that were performing so well, I'm thinking miners, the oil stocks that were leading so far this year, those really didn't seem to come back into positive territory. They reversed off their lows, but still had a ways to go before getting back into positive territory.
I think that's a really good point. There's a lot of beaten down stocks. I mean, yeah, aside from Fortinet and Moderna were two of the three best S&P 500 gainers today. But yeah, I mean, but aside from a couple of tech names, most of them were pretty beaten down. Some of the leading groups or groups that had been leading not doing so well. So it's a generally weak market. There's not really, it's not that divided market we were talking about for quite a while. It's mostly just things that aren't working. The whole market is in trouble right now.
Mm-hmm. And let's go ahead and take a look at the S&P 500 since you brought that up. This was the index that was holding up a lot better, and certainly it was a pretty powerful reversal, and we're still holding above the lows, I guess. But what's your take on the S&P 500 action?
Yeah, it was nice to see this because this was getting near the lows. The NASDAQ, they were getting near the lows. They bounced back. But, ultimately, I mean, if we reverse lower, it's like a team that's behind and scores a touchdown and everybody cheers in the end zone. And then the other team comes right back down and scores a touchdown and you lose all that momentum. I mean, this doesn't mean much. It doesn't mean much. I mean, this meant a lot because it broke a lot of support. It, really was breaking lows. We need to see a lot more before we start thinking that the tide has turned.
And one of the things that we were talking about with Eric Kroll on the last podcast was the follow-through day and how the S&P 500 was the one that had the follow-through day first. That was on March 16th, and we still haven't undercut that low of the follow-through day. We did it intraday.
We haven't closed below the low of the follow-through day.
Exactly.
We did go undercut it.
We undercut it, but we didn't close below it. So that's one of the factors that really kind of leads to a market failure. A lot of times you're usually going to knock out the lows, and we've certainly done that on the NASDAQ already, but remains to be seen if the S&P 500 can hold here, but there's certainly still a lot of weakness that we've been seeing. Let's go ahead and take a look at some of the stocks. Exelixis. Is that how you pronounce it? It's a little bit
Alexis? I don't know.
Exelixis. Yeah.
EXEL seems fine.
Let's just go EXEL. So this is a biotech company, and we had George Kachuk, who was a investing champion back in 2020, and he was talking about a lot of biomed, biotech stocks. What is it about EXEL that kind of caught your attention, Ed?
Well, on a daily chart, it's sort of been trading tightly. It's finding support at the 21-day line, but it looks even better in many ways on the weekly chart because it had a 3 weeks tight in here, which is still valid, and it's pulled back to about the 10-week line. So you could sort of use that kind of thing. If it broke above this area, you could use that as an area, and you could sort of think of this 3 weeks tight as sort of a whole, sort of a whole handle on this whole consolidation, however you want to define it. So there's, those are all positives. The relative strength is positive. The earnings are positive. There's been some nice growth here. Yeah, it's supposed to slow this year. It was our stock of the day. Allison Gatlin does it, and boy, I love her stock of the day because she always talks about really what goes into them and talking about what the company is doing. Definitely encourage people to read that. So I think there's a lot of good fundamental and technical factors going on.
Mm-hmm. And one of the things that we kind of shy away from sometimes is when we have a deep base. This one did correct more than 40% off of its all-time highs. But I think what you pointed out there is that tight action. When you start to see tight action after that, that kind of gives you a little bit more of a go-ahead. Talk to me about the relative strength line on this. It's certainly, if you look at the most recent action, it's very powerful, but it's not up to the old highs. Is that something that we should be concerned about?
We sort of look at a couple things. Look, you'd love it to be an all-time high or at least a 52-week high. I mean, and it is basically at a 10-month high or so. So it is at a 10-month high. It's not, it's above this consolidation high if you want to treat this as a cut base or some kind of base. It's not quite above that, but the trend is improving. So it has issues. It's had, on a monthly chart, this has had a long slide. So those are all issues. Is this finally waking up? We'll see. The problem with sometimes with biotechs is that sometimes there's great news and all of a sudden the stock explodes, or there's terrible news and the stock implodes. So it isn't necessarily quite as steady. There's this great news or not, because there's trial data. They're looking to expand the use of their cancer fighter. They're studying it in conjunction with some Bristol Myers blockbuster drugs, seeing if they can expand out. Now, if that works out, you could expect really big movements. Obviously, that might not work the other way.
Mm-hmm. And as you mentioned, Allison Gatlin's story, stock of the day, that's probably a good place for people to go to get more information on what's going on with this company. Let's go ahead and switch over to WWE, the World Wrestling Entertainment. So wrestling, a lot of the media, we've been talking about streaming and all this content that's out there. What's allowing WWE to hold up as well as it has?
Well, I mean, obviously didn't have the greatest prior uptrend. I mean, it's been sort of struggling for a little while here. So there is that. I don't know. I have not paid a lot of attention to WWE for a while. I'm not a big wrestling fan, and this stock fell off my radar after this big run it had here. So they do have earnings in a couple, in late next week. So I think that's something to keep in mind, because as Netflix struggled, CNN Plus struggled, the era of streaming and subscriptions, is that getting out of favor? I don't know. But, there are some things that are positive there. They should have decent earnings this year. There's nice support at the 50-day line, 10-week line, which is right around this buy point here. It sort of formed, it broke out, pulled back, but not too badly. You can see how the RS line, much like EXEL, is above this prior part of the consolidation, is at a 10-month high with a prior downtrend. So there's a lot of similarity here. Is this going to go on another run? I don't know. I think that investors might want to keep an eye on this, like any other stock that's sort of setting up. Keep an eye on it. Maybe the market will be in better shape. Maybe the earnings will make people feel more confident about this company's outlook, because I'm intrigued to see what's going on, why this is doing well.
Mm-hmm. And one of the good things about looking at these technical clues is it gives you the sense of, oh, here are some companies that are holding up, looking intriguing, as you said, and those might be the ones that you start doing that research on. If you're not going to be doing any buying, if you're going to be sitting on your hands for a while, you do have the time to do a little bit of research on what might be driving some of these companies in the future.
Yeah, and again, just because it's holding up now doesn't mean it'll hold up later.
Hmm.
Like that you should be building your watch lists and changing them consistently. There's a lot of stocks that look good that suddenly fell apart late last week.
Yeah, and ultimately you let the market decide and tell you which one is going to be the leader. Speaking of which, Marriott, ticker symbol MAR, this is one where the reopening plays, the travel stocks, seem to have been coming up and getting bashed down. It's been very news oriented, and we had another stunning move on these over the last couple weeks, only to be reversed last week. But is Marriott holding up better than expected at this point?
I mean, there's different ways of looking at it. It's hard because it doesn't feel like this is a hotel operator, but more like a cruise ship because I'm feeling seasick just looking at some of these gigantic V's that are going
Mhm.
on. Had a big move because a lot of the airlines started saying, hey, people will pay whatever. They just want to get out of their house. They've been stuck for 2 years. We'll pay whatever rates there are. So it surged out. Then everything fell apart. But it is holding, it's held it, found support at the 21-day line. It's above the buy point. It looks messy. It doesn't look great. I mean, that would have been hard because this had a big move and then round tripped it. But the RS line is right at highs. Unlike the other one, it really is at a new high. Definitely a new consolidation high, probably the highest in 2 or 3 years. There are reasons to think that things are going to get better. You can look at this. Here's the fundamentals. This is getting back, basically to where it was pre-COVID. So, you're seeing a bounce back after a long wait for some of these names to come back.
Hmm. So ultimately, we went to market and correction last Friday. There's still a lot of damage that's being done out there, especially in those stocks that were leading. Any final words in terms of what people should be doing right now?
Yeah, I mean, don't get excited by one day like this. Let's wait and see if it continues. And then even if it does get in there, like let's say a few days from now, things really start to look good and there really start to be signs, the market, leading stocks, all sorts of things. Okay, you might then start to buy, jump in, get in, but don't have to rush in. You can at that point step in. But right now, this is the time of watching, getting prepared, getting ready to find the stocks that you think really will be the leaders, but don't try to buy ahead of time. Don't try to cheat in this situation. The downside risk is way too high.
Hmm. And sometimes I'll tell you what I do is I'll take a look at the index funds, either QQQ, SPY for the Nasdaq 100 and the S&P 500 respectively. And if I'm not quite seeing stocks that are setting up, but the indexes look like they're improving, sometimes I'll take a position in one of those or even the leveraged ETFs to kind of start and then let the market tell me, hey, this is where the leadership is, if it is in fact going to go there. But otherwise, I can manage that ETF, index ETF, relatively easily. So that's another option. Well,
That's
thank you very much, Ed, for your analysis. And that'll be it for us today. Please join us tomorrow if you haven't already on IBD Live. We're going to have David Ryan on the show, which is always great during a time of such turmoil. He was actually warning our listeners last week that the window may be closing on this rally. So we'll hear what he has to say about the reversal and hope you tune in for that. If you haven't gotten a trial already, you can do that at www.investors.com/IBD Live. If not, then we will hopefully see you tomorrow on Stock Market Today. Thanks for watching.